Today on Forbes, why PayPal's comeback plan could take years, if it works at all. The past 3 years have been tough for PayPal, one of Silicon Valley's oldest and largest fintech companies. PayPal is a storied business that counts Elon Musk, Max Levchin, Peter Thiel, and Reid Hoffman among its founders and early employees. Now, its stock has fallen 80% from the $360 billion all-time high market value it hit in July 2021. The share of e-commerce sales worldwide that flow through its branded PayPal button has been eroding, and some of the company's recent attempts to rejuvenate its product lineup have gotten little respect from analysts. Wall Street's smirks and yawns are likely a harsh reality check for PayPal's 46-year-old CEO, Alex Chriss, who became CEO just last fall after 19 years at Intuit, where he was an executive vice president and oversaw its QuickBooks business. He was brought in to help the 26-year-old San Jose-based company regain its momentum, but it appears that won't be easy. Nearly a decade after its spin-off from eBay, which acquired the payments startup in 2002, PayPal still has a profitable franchise, with over $4 billion in net income in 2023. Its digital financial network of 220 million monthly active customers is one of the world's largest, standing behind juggernauts like Apple Pay and China's Alipay. While PayPal has done dozens of acquisitions and entered nearly as many new business lines, more than 60% of its $14 billion in gross profits still comes from the PayPal button, according to Autonomous Research. That's the icon people click to pay for anything from tchotchkes on eBay or Etsy to diapers from Target. Many users still see it as a safer way to transact instead of trusting an unfamiliar website or person. But transaction growth for PayPal's branded button is slowing. Last year, it grew just 7% in dollar terms, compared with about 9% for e-commerce overall. From the outside, that button appears largely the same as it did years ago. FT Partners Managing Director Craig Maurer says, quote, "The core business is still effectively the cash of the internet, payments 1.0. Part of the problem seems to be that PayPal has long struggled to modernize and integrate disjointed parts of its payments technology. Meanwhile, the risk and fraud prevention benefits that have buoyed PayPal for so long have ceased to be the competitive advantages they once were, with products like Apple Pay and Shopify's Shop Pay taking a growing share of the market. Now Chriss, who was awarded a $42 million pay package by PayPal in 2023, part of which is contingent on the company's future performance, is hanging his hat on new strategies, including a so-called Fastlane product to speed up guest checkout. But some analysts are skeptical of the impact it will have on profits and think the plan will take much longer to make a difference than investors realize. Before Chriss took over at PayPal, former American Express executive Dan Schulman ran it for 9 years, nearly quadrupling PayPal's yearly revenue to $30 billion and growing earnings per share from under $1 to $3.85, according to FactSet. Yet today, in retrospect, some Wall Street analysts fault Schulman for going in too many directions. They point to acquisitions that haven't seemed to pay off, such as iZettle, a Swedish company that makes point-of-sale checkout devices, which PayPal paid $2.2 billion for in 2018. They also point to Hyperwallet, which PayPal bought for $400 million the same year, which makes payout technology for e-commerce platforms. And also, Honey, a platform that helps website visitors automatically find coupon codes and cashback offers, cost PayPal $4 billion in 2020. Schulman, who is 66 years old and who owns about $40 million worth of PayPal shares, told Forbes some acquisitions have worked out, quote, extraordinarily well, while acknowledging others have done worse than expected. When asked if he took on too many different priorities, Schulman responds, quote, "Every year we looked at what we were trying to drive and tried to do fewer things rather than more things. It's not always easy to do." For full coverage, check out Jeff Coughlin's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.